Hi everyone, welcome to bonus module 3. This is actually not the whole module because what we're going to be doing in this one is including chart of the week examples over a course of about 6 months. So what we're going to be doing here, and this is just an introductory segment, and I just want to kind of give you the rundown on what to expect from chart of the week, what we're going to be looking at, what the process is, a little bit about the logistics. So essentially what I'm going to do is I'm going to do a complete multi-time frame top-down chart review for one trade each week that I actually made in my own personal account. So what we're talking about here is not textbook trades, but actual executed trades that were executed in real time. And I'll run you through all of the analysis I did and explain to you the reasons that I made the decision that I did and what the results were, and give you the complete rundown. Fairly similar in scope to what we did in Module 8 of the MACD course. Now, like I say, I could have taken two different approaches. One would be just to use sort of textbook trades where I go through any number of currency pairs and just find some nice looking chart examples and say, hey, isn't this cool how this demonstrated some principle or other that we went over in the course. But I decided instead it would be more beneficial to use real actual trades. And in a sense then what we're saying is that this is going to reflect my own personal trading preferences. And you know, for better or worse, there are aspects of how I go about trading that will differ from how you do it, but to make this a real trading example, it has to reflect how I actually trade, of course. So I just want to tell you or give you a little bit of a heads up how I sort of set up my trading approach. We're going to be looking at one pair almost exclusively throughout this entire module. And you know, I've really gone around the block on this myself. I've gone from everywhere from looking opportunistically through up to 20 or 25 different currency pairs down to 10 or 12, then realizing maybe that's too much and narrowing it down further to a half dozen. And it can be done. I've had nights where I've pulled in, 150 pips trading 7 different currency pairs. But what I found is that that's more work than you really need to undertake to get the desired objective. And your eyes get tired, your brain gets frazzled, and that's a lot of flipping through different charts. Some people can do it. I've just decided that focusing on one very robust currency pair, the pound yen, gives me all the opportunity I want to fulfill my personal objectives and to be able to do it just looking at 6 or 8 charts in a night rather than 30 to 40, which I just think makes eminent sense. So I refer to it as GY, just the abbreviation of GBP JPY, pound yen. If we reach a point anytime over the next 6 months where GY goes into a really protracted consolidation market and the nightly opportunities are pretty non-existent, I might decide to pull in a different pair instead and trade that for a week or two or however long it takes. For example, I might bring in pound USD or something like that. I also like Aussie and Kiwi. I'll let you know ahead of time what I'm doing and why. This last happened for me back in the first 2 weeks of May. Pound yen went into a very, very anemic consolidation market, and it was really hard to get those nice big juicy runs out of it. And you can never really tell when that's going to happen. If it does, we'll make some changes. But generally speaking, we're going to focus on GY. If this is not a pair you look at, I would say have no fear. The principles apply regardless what currency pair you're interested in or what time of day you trade. So all I can say is just try, if the material we go over is of interest to you, see if you can just adapt what we're talking about to your own personal preferred pairs. I trade from 8:30 p.m. West Coast time. I'm on the west coast of North America in the Los Angeles time zone, I guess. And so for me, that's 8:30 p.m. is kind of Tokyo midday. So I'm grabbing kind of the Tokyo afternoon session into the London Open and about the first half of the London session, more or less, round about 8:30 to 2:30 a.m. Each weeknight. So that's kind of when I'm trading and when I'm looking at these setups. And I found that time frame is very fruitful for GY. It's a great time of day to trade that pair, as well as a lot of the other carry trades. And then, of course, given that these are real trades and not textbook examples where I'm trying to satisfy everybody's different preferences, these do reflect my own personal chart and signal configurations, some of which you might like, some which you might not. And, of course, you're just free to adapt or exclude or omit anything that doesn't appeal to you. Just see how you can apply anything that's of interest to your own situation. Now, just a little bit in terms of my own trading philosophy. This is something that I believe Vic Noble, perhaps Chris Laurie, and Peter have addressed at some time or other in the proceedings at Forex Mentor. And that's the philosophy of doing one thing over and over and over again. I like the idea of being a specialist. I'm a GY, pound yen specialist. I specialize in a certain way of trading it, which really appeals to me, and I try to do it the same way over and over. So in fact, you may find that after you've gone through 10 of these chart examples or so, you're not learning anything new. That's just because we're trying to really stick to our knitting and not get distracted by different flavor of the week opportunities. I think a lot of people might have a tough time making a go of this just because they're just sort of running all over the place, trying out different things. And I've just found an approach that works for me. I don't need to change it or revise it. I just stick to it and do it over and over. So that's what we're going to really focus on in these Chart of the Week examples. Another aspect of my personal trading philosophy, I very much try to practice this kind of set it and forget it concept. To my way of thinking, there's really only 3 variables that you have to actively manage after you've done your homework, identified a setup, and identified a trade basically. And those 3 variables are to get a good entry point, to set an intelligent stop, and to find a really good exit strategy or a target. And I automate all of those variables. I use exit limits and protective stops. And once I've got all 3 of those variables applied and I've done my homework doing my reward to risk assessment and risk assessment, position sizing, and so forth, my attitude is there's really nothing left for me to do. And I think a lot of people will probably want to sit in front of their computer for hours and hours and hours watching every tick that goes by. I personally find that very tedious and counterproductive. If I've done my homework, if I've made the correct decision, I got in at a good time, and I told my market maker when to get me out, there's really nothing left to do. So I very much apply the set it and forget it concept, which means a trade might take many hours before it's fulfilled itself, but I'm not waiting there in real time. I'm going to go home, I'm going to go to bed and sleep on it, basically. So that's a little bit about my own personal trading approach, just so you know, again, what to expect in these chart reviews. And if you have at any time a question or a comment or a piece of feedback on one of these, please just send an email to info@forexmentor.com and they will relay your message to me, and I'll try to get back to you as quickly as I can. And anything's fair game there. You might see something that I've missed, or you question the logic of something I did. That's totally fine. I more than welcome your feedback. So anyway, that's a little bit on the format for the Chart of the Week. Now let's just look at the objectives of what we're trying to accomplish here. I just realized I forgot to mention one aspect in the last slide. In terms of the logistics of Chart of the Week, what I'll do is I'll probably end up posting the example as soon as I'm able to in the week. So if I got a chart for you that's done on Monday, you'll have it early in the week. But if I don't get to the one trade that I want to document until Friday, you might not see it posted till the weekend. So all I can say is, there's no one set time each week when a new trade example will be posted. I just ask that you apply a little bit of patience. It'll certainly be up by the weekend following, and if I should happen to go on vacation or be out of town and just can't do it, I'll give you a heads up as well. Okay, so what are we trying to do here? Objectives-wise, of course, we're going to try and, as much as possible, reinforce the material that was presented in the course, Forex Profits with MACD, which presumably you've seen as a prerequisite to gaining access to this part of the website. And we're also going to continue to explore the different ways MACD can be used in conjunction with different time frames and also with other events and indicators concurrently. So in other words, we might use MACD to help us map out a very high-level trend bias on a weekly chart, but we might have a different function for it lower down as an entry signal, for example. And if you're a newer trader, hopefully you'll find some of these examples inspirational. I'm not professing to be Joe Rocketship trader, but you know, we're definitely shooting for runs of 100 to 200 pips pretty routinely here, and when you see some of those executed in real time and you get the chart rundown that underlies it, hopefully you'll find some inspiration if you've been having some struggles, which we all do when we get started. There's no doubt about that. And just in terms of the daily target, conservatively we're really shooting for 50 pips day in, day out, 50 pips double net, I should say, and that means winners net of losers. And the trading volume for myself is typically 1 to 2 trades a night on GY. I'm averaging about 10 to 12 a week these days. And most of those I'm going to be shooting for at least 80 pips. And very often 100 to 200 pips on a really nice hourly, 2-hour, 4-hour setup. But 50 pips is a nice conservative benchmark to shoot for. And you'll definitely see in the examples provided we'll routinely exceed that by a fairly comfortable margin. So that's it in a nutshell in terms of objectives. Just again reinforcing the course, which in turn reinforces a lot of the stuff you've seen in the daily AM reviews and Peter's courses, directly inspired by all of that. So there's nothing here that should starkly disagree with anything you've seen before, and hopefully give you some new ideas on top. Okay, proof of trade. What do I mean by that? Well, I'm not going to record trades as I execute them in real time. Again, I just mentioned a minute ago, I apply the set it and forget it approach. So if I'm not watching a trade unfold in real time, why would I want to record it that way? If you want to sit through 4 to 6 hours worth of tick data unfolding, you know, that's your preference, but I think that would make for both a very boring presentation for the most part, and also result in files that were many hours long, unless we were doing scalping, which is something I don't usually do. So I don't want to make this boring. I instead prefer to focus on a more efficient presentation style, where we're getting to the important points quickly and not having to wade through a lot of excess material. Now, I've heard a lot of people out there in different other services from time to time complain that, well, you know, anybody can go and do a textbook trade. It's very easy to show a winning trade after the fact. So I just want you to know that's not what we're doing here. Like I said earlier, I'm going to give you trades that I actually executed, and just to make sure there's no doubt in your mind, I'm going to provide proof of that. It might look something like this. This is not an open positions window summary. This is an activity report excerpt from the particular market maker I deal with, so you might not see it like this, but I'm going to endeavor to do a screenshot of the open positions window, which will show you, amongst other things, the protective stop level I set for the trade, and then a closed positions window screenshot, which shows you where the trade exit occurred, and we can put the various numbers there together to do an after-the-fact risk-reward assessment, which I think is an extremely important aspect of any quality trading system. So, for example, I'll say I could show you on the chart that the logical place to put the stop was 30 pips away, and this information will show you whether I did that or not. And then the closed positions window will show you the profit. Let's say it was 180 pips. So we'll put the two numbers together, and that will say a reward to risk ratio of 6 to 1, which is really great. I'm very happy when I attain that kind of result. So I'll give you all the proof of trade, and you will also see it documented in the chart examples, so there's no doubt in your mind that these were real, actual trades and not just pretend textbook trades. Now, in any given chart of the week example, we may not use every single one of these, but I'll give you a rundown on the charts that I actually do consult on a regular basis. The weekly chart for highest level trending indications, daily chart also for high level trend and to identify dips and rallies against the weekly trend. A 4-hour chart, which is for me the highest level intraday chart that I use. A 2-hour I view as kind of a nice bridging view between the 4-hour and 1-hour chart. For the 1 hour, this is probably my favorite chart because I find that more often than not, any kind of continuation pattern, Tom DeMark style trendline analysis, I tend to see them most easily on this time frame. Once we get up into the 4-hour, things get a little bit too smoothed over, and down in the 15-minute, for my preferences, I find it a little too granular. But on the 1 hour, I always see those trend lines happening very easily. And so that's just a kind of a nice time frame to work with. And then the 15-minute is about as low-level intraday as I will go to look for setups. Beyond that, it gets into the realm of noise. So really, on an intraday basis, of working all of these 4-hour, 2-hour, 1-hour, and 15-minute charts for the purpose of finding setups. And then once we do, the primary chart I execute off of is the 3-minute. 3 minutes may strike you as a kind of a weird number. There's no rule that says that's better than any other. You could prefer the 5-minute, that's fine. 6-minute, whatever you want. 10-minute. But I like the 3-minute. It's a nice kind of saw off between a 5 and a 1-minute chart. From time to time, I will drill down even further to the 1 minute if I feel that there's a good reason to do so. Maybe I'm just not getting a deep enough signal on the 3-minute, so the 1 minute can come in handy. So let's count those. That's a total of 1, 2, 3, 4, 5, 6, 7, potentially 8 charts we're going to look at, although realistically we'll probably end up focusing most of our time on maybe 5 or 6 of those. And, realistically looking at a weekly chart, the scenario is not going to change drastically from one view to the next, certainly on a day-by-day basis. So I might tend to gloss over the weekly and possibly even the daily fairly quickly if nothing much has changed from one look to the next. But in any event, we'll use no more than that and often slightly less than that. But those are the 8 charts in my setup, at least, that we'll use for these Chart of the Week reviews. Okay, in terms of the indicators applied on each chart, I basically use pretty much the exact same configuration on every time frame. I don't change the settings. I don't change the indicators. It's all pretty much the same look, regardless of what level we're at, with a few tweaks here and there. It's a pretty full slate of stuff that's on there, so we'll just go over pretty quickly, and I'll just show you an actual chart example in a moment. So in terms of exponential moving averages, I apply the 100-period EMA on the weekly and daily charts only, the 200 EMA on the weekly, daily, and the 4-hour. And some of these numbers now look pretty strange. What's a 400-period EMA? Well, on the 2-hour chart, a 400 EMA is just the exact same line as the 200 EMA on the 4-hour chart. So what you do, you just apply a ratio of time frames and multiply it through to get an equivalent. So 4-hour to 2-hour is double. So for the 2-hour to equal the 4-hour, you double the value, and that equates. So in other words, to get a 200 EMA on the 4-hour chart down onto your 2-hour, you multiply the setting by 2. 200 becomes 400, and it's the same line. And similarly, I have an 800-period EMA on the 1-hour chart. Again, that's just taking that 4-hour 200 EMA and transposing it down. And then I also put the 100 EMA on all my indicator panels. I find it's a nice kind of trigger, especially for an indicator like RSI, which doesn't have a trigger line. It's a nice addition to make to help you read the different indicators. So probably the question that's going through your mind is, gee, Frank, why don't you put the 200 EMA on all your time frames? For example, Peter shows us often examples where you can read the 200 EMA price relation to it on multiple time frames and find trade setups that way. The reason I don't is just because I only use the 200 EMA myself for a very simple reason, which is critical support or resistance on high-level time frames. I really like the configuration, the 2-panel MACD configuration, which allows me to read or monitor or follow trend, I find, more accurately and in a more timely manner than is possible on the 200 EMA. That's just a personal preference. You might not find that accurate, but I like to work with as little material as I can to make the decisions I want. So if I plastered all these EMAs on different or on the same setting on different time frames, I find that pretty soon I'm getting kind of fatigued. So I just like to work with just basically 2 or 3 of them and transpose them on down. A parabolic SAR, as you've probably gathered by now, I like that indicator a lot. I use the default setting, and daily pivots is absolutely critical. We're going to use extensions wherever necessary. So the standard range you've probably seen is S2 up to R2. We're going to use the extensions beyond that, R3 and R4, S3 and S4, if we need to. Which is often something you'll see on a Monday session in particular. If Sunday was very quiet and the Tokyo Open, the pivots that paint in are going to be artificially constricted. Price will just dash right through either R2 or S2, and then we have to start painting in those extensions beneath. I also like using pivot quarter lines. This might be something that we get into as a topic as we go in the chart of the week. Quarter lines are remarkably useful for assessing support or resistance when you're in that so-called no man's land in between one of Peter's M levels and a standard pivot level. So we'll get into that later as required. Again, this 2-panel MACD approach, I like having a slow MACD setting to help me make sense of little blips and dips on the faster setting indicators. And then, of course, the fast setting MACD, which we've seen in the course itself, an 8/24/9. That, I believe, is the Joe DiNapoli setting, so-called, a famous trader who has determined that that's a nice setting to work with. In reality, it's not a lot different than 12/26/9, just a little bit quicker, but a nice quick versus a nice slow setting. I've got the Stochastics Momentum Index, SMI, and if you're not familiar with this, don't get spooked. SMI is just a smoothed version of stochastics itself, and what happens is that it tends to perform more like an oscillator such as MACD instead of those herky-jerky up and down spiky behaviors that you see particularly on fast stochastics. So SMI, and there's the setting we use, and then I use a fairly fast 9-period setting on RSI. And it's interesting when you stack those 4 indicators, almost without exception, the order in which they will trigger is first RSI 9, second SMI, third fast MACD, and fourth slow MACD. So the way I've got them stacked in the chart, we're really reading the fastest signal to the slowest from bottom up. And it's kind of cool actually to do that, because you might see nothing on the MACD, or MACD might look like it's turning over, but when you look down, drill down to the SMI and RSI, you can see that they're already moving ahead of MACD, at least at this configuration of settings I've got here. So that's a rundown on the indicators, and now to cap off this introductory module, let's just look quickly at an actual chart example so you can see what they actually look like. Okay, so here is an actual one of my chart examples, and you might not be accustomed to using 4 indicator panels, in which case this might look a wee bit scary, admittedly. I would just say that don't worry about it if you're not used to quite this much material. You'll find as we go through the chart of the week examples, there's a fairly simple process that we can apply for getting good signal readings and doing so fairly quickly. I apply a very simple process to these things, and it usually works. But anyway, from top down, what we've got here on this weekly chart, I believe we're looking at the weekly chart for pound yen. I'm not sure. And of course, I didn't put in the time scale at the bottom here either, which is unfortunate. But anyway, that's not the point. The point is, from top down, you can see we have parabolic SAR on either side of price. We've got the purple line being the 100-period EMA, and in this particular example right over here to the right-hand side of the chart, you can see what a great job that did outlining some fairly critical support here. Then the gold line underneath being the 200 EMA, the 40-80-10 slow MACD setting, the 8/24/9 fast MACD setting, the I can't remember the numbers now in all honesty, 14355 I think, SMI, and then the 9-period RSI below it, which is this purple guy. And then, of course, the next question going through your mind is, what are all these lines running through the indicators? These are, of course, the 100 EMA indicator overlays, indicators on top of indicators. So just to rehash some material we've gone through already, you can see here's a really good example on this chart how on a higher level time frame like a 40-80-10 MACD, when MACD crosses its own 100-period moving average on this high level, it tends to be fairly momentous, and as angle and separation picks up, you know you've got a very protracted trending situation happening here. You can just see this in spades. Back here in whatever time frame this was, it might not have been terribly obvious. MACD was just sort of hugging its trigger line fairly flat, but the important point is it crossed over its own 100-period EMA from below and stayed above, albeit slightly. Nevertheless, price just fulfilled the signal indication quite well and maintained its very bullish trending attributes for quite a long time here. So anyway, that's just a quick rehash of some material we've already covered on the indicator overlays in Module 2. But in a sense, that's what our basic chart configuration looks like that we'll be reviewing in Chart of the Week. Again, have no fear that this doesn't look like your chart. It's the principle involved, which is getting 1 or 2 really good indicator readings on each of up to 8 time frames and putting all the information together, like Peter says, putting the pieces of the puzzle together and making some intelligent trading decisions. And hopefully when you see how these were actually executed, that will reinforce how to read these charts this way. So that's just a quick primer on what my Chart of the Week examples are going to look like. And I hope to get to the first one fairly soon. And like I say, they will be culled on a weekly basis, 1 per week. And if there's any reason I can't do it, I'll certainly see if we can get an email out or something, or give you an advance notice as to when the next one will appear. But I'm certainly committing to the schedule of 1 per week. So there we have it. Let's move on to the next example as it's posted.